Acting Treasurer Bill Shorten has warned of a tough year ahead for the Australian economy, with more job losses expected as global economic uncertainty continues. Figures released today show the nation's unemployment rate has remained steady at 5.2%, but the economy lost more than 29,000 jobs in December. The results come amid warnings from the World Bank of a new financial crisis, potentially worse than the first GFC. For his analysis of the latest developments, I spoke to Chris Richardson from Deloitte Access Economics, who's also worked at Federal Treasury and the International Monetary Fund. Chris Richardson, is it fair to say that at the moment all eyes are on Europe?
Yes, all eyes are on Europe, and they should be. Basically, what happens to Europe will determine this year lots of things. For families, it'll tell you where mortgage interest rates are going to go, what will happen to jobs and unemployment, even things like share markets. For businesses, it'll be the key driver of profits. And for the federal government, of course, it will be the key determinant of whether they make the 2012-13 federal surplus that they're looking for.
Just to look locally initially, what do the latest job figures tell us here in Australia?
Look, they tell us that Europe is already a problem for us. Now, that's not true across the economy as a whole, but it is true when it comes to employment. The headlines have worried a bunch of people, and employers are starting to give overtime instead of creating new jobs, just being a bit more cautious there. And you're seeing cost cutbacks in a few sectors. The finance sector, the likes of the banks, they're starting to lay off people. So too governments, federal government looking for its surplus, state governments looking to hang on to their AAA ratings. You are seeing sectors starting to pull back on jobs, and that is one clear victim of Europe already.
What do you make of these dire warnings from the World Bank talking about another financial crisis? Is Australia vulnerable?
Look, we are vulnerable, but it's worth remembering that what the World Bank is saying is what every forecaster around the world is saying, that the more likely outcome is essentially that the sticky tape holds Europe together, and under those circumstances, although growth is indeed weaker, it's not that bad. Having said that, again, like every forecaster, the World Bank then goes on to say, we think it'll be okay, but if it's not, then it's a return to global financial crisis, and GFC2 would be tough for all of us, including here in Australia.
How much stronger might we be than the rest of the world, though, given our experience last time?
Well, look, under either scenario, whether Europe muddles through, you would actually get outcomes in Australia rather better than most people think, rather better than most people realise. We've got magnificent momentum, not in sectors like retail and manufacturing, they're weak, but those monster mining projects, they're giving us a lot of momentum. And in fact, even if Europe were to blow up, if its banks were to go bust, if its governments were really to struggle to raise money, you'd probably still prefer to be in Australia than a bunch of other places. Again, that mining momentum would be marvellous for us, and the Reserve Bank could cut interest rates a fair way.
And you said that what is key to us, in a sense, is what's happening in China.
Yes. Look, China's been our greatest supporter, if you like, of our economy across the last decade. We're now much more dependent on China than we ever were on the US. And there's a pretty simple rule of thumb for 2012. If China is fine, then Australia will be fine. Now, China is slowing. And Europe is a risk to it too. It sells more to Europe than it sells to the US. But so far, what's happening in China is still okay, and that's good news for us.
Now, what about the International Monetary Fund seeking something like $500 billion US? What's the significance of that?
There's a bunch of speculators trying to move things around at the moment, and bless them, they're out for a profit. At the other end of the table, if you like, the likes of the International Monetary Fund trying to stare down some of these events. And the bigger the pot of money, the more they say that they can be the world's last resort, the banker for the world. If these countries can't raise money anywhere else, then they can get it from the International Monetary Fund. Under those circumstances, the IMF fund is now saying we need more than we thought. I think that's right. I do think they'll get it, but you'll find a bunch of governments grumbling. Remember, it's not government spending. It's not Australia stumping up extra billions of dollars that could have gone to hospitals or schools. It's a loan from us to the IMF. They lend it on, and eventually they get it back.
So the talk of a rocky road ahead, even in Australia this year, do you think that's being overstated?
Look, there are some risks. I mean, confidence has fallen as much here as anywhere else, and I think that's too much. And you know, other places face bigger risks in the short term than we do. The sticky tape that's holding Europe together is coming from their central bank, the European Central Bank. They say that they don't want to support governments, they're only willing to support banks, but they're providing loans so cheaply to Europe's banks that a bunch of that money is actually making its way back to Europe's governments. And that combination is letting things hold together so far. Now, there are no guarantees. Markets can go bad faster than governments can call a committee to deal with it over in Europe. But so far, still so good.
What are the critical junctures, would you say?
Look, it's not so much these meetings, the length of time between these Eurozone crisis meetings keeps getting smaller and smaller. It basically comes down to whether the European Central Bank and the IMF between them provide enough funds to keep governments and banks going. Now, there's a lot of politics tied up in that, particularly German politics. And the tricky thing is that what's good for the global economy is not good for voters, or at least hanging on to votes in Germany. And that's that tricky competition between good economics and good politics, which is probably going to be the dominant risk for this year.
I do get the sense that despite the gloomy headlines, you're not prepared to say that it's all bad. I know people hate economists, though, on the one hand. On the other hand, right now, it's true. It's not quite 50-50. It's probably a bit more likely that Europe holds together, that it manages to muddle through without blowing up banks and governments unable to fund themselves. If that happens, then Australia will be better off than most people realise. Chris Richardson, thanks for speaking to us.
Thank you.